Ceramics just came out with its numbers. Let's talk about what's really led to the hit on margins. Ashok Kajaria, the CMD at Kajaria Ceramics, joins us on the show right now. Ashok, hi, afternoon. Let's first talk about the top line growth. Clearly, it seems that it's been aided by a 9% volume growth. But tell us, what was the average dip in price mix growth?
See, the volume growth is 9% for the quarter. But as you are aware, we have already said that for the full year, we are looking at 12 to 15% volume growth. And revenue growth, if you see, it is about, because of last quarter was excise, this year quarter was with GST. The revenue growth is approximately about 7%. And for the full year, for the tiles, we are looking at the same revenue growth, 12 to 15% volume growth. Same as revenue growth will be more or less same. And of course, the sanitary ware and faucets will be another 7% revenue growth on top of that.
If you're optimistic about the second half, are you largely betting on Diwali Dussehra sales to kick in? And is there been an historical impact because of the Diwali Dussehra sales?
Second half has always been better, but this year, without looking at Diwali Dussehra sales, GST has played a very positive role, and the introduction of EWA bill has also played a positive role from 1st of April. Things are looking up and up. And as you know, Morbi is a great impact on this industry, and right now they are still doing a lot of things which is not okay under the table. But I think 6 to 9 months it will positively correct, and we see a very positive scenario emerging forward.
The turning point, like you said, has been GST and demonetization. A lot of do number has become make number, a lot of undercutting has gone away. So can you quantify for us that when do you think the real impact of GST would start kicking in, and how much of the unorganized market has moved towards organized players like yours?
A very valid question. I think 6 months down the line, a lot of unorganized things will gradually shift to organized. The biggest problem they are facing is their traders don't have availability of bank credit. And that is what is coming in the way. The trader in that category, you see, the organized player, the trader has no problem. They have been dealing with number one money. The traders in that category were dealing with mostly with cash. Now, with gradually, they are trying to transform them into this number one economy. And I would say it will take them 6 to 9 months to come into this system. I personally feel things will be very, very positive 6 to 9 months down the line.
What has been the contribution from premium products to your volumes and to your total sales?
As I said, first quarter is just a start. We have gained 9% volume growth. But going forward, as I said, for the full year, we are looking at 12 to 15% volume growth. And also EBITDA margin right now is down to 14.71 something. But for the full year, we are looking between 16 to 18% EBITDA margins.
What will
gas has been the factor in the first quarter where we spent almost 15 crores more.
No, that indeed is the case. But what can sustain margins at these levels? So what is it that you're looking at in terms of controlling costs on to be able to give that cushion to margins?
Two things. We have taken a small price rise in ceramics division already, and in glaze vitrified we are moving towards bigger sizes where more value addition would be there. We just had a big launch on last Saturday, and we are more in GVT division. We are going towards more value added tiles, bigger tiles, which will give us better realization.
Broadly quantify from us that gas as percentage of your total raw material cost, since that's the that is the variable part, and that is where the large part of delta for earnings would kick in. How much gas or feedstock as percentage of your raw material cost currently at?
See, gas cost to the cost of production is roughly between 18 to 20%.
Okay.
But with the gas prices going up in the last quarter, it has gone up from 18 to 20% to about 22 to 24%. But since then, the gas prices have more or less stabilized. As you are aware, the oil prices have stabilized. So had the gas prices. And going forward, as we are all aware that gas will also be part of GST very shortly. That's what we understand from the finance people. So with that, I think we are seeing a positive scenario.
Comments. Now, if you're confident of a double-digit growth in the second half of this year, do you have capacity to capture this kind of an growth? And in FY20 or 21, because as an entrepreneur, as a businessman, you will have to consider next 3 years of growth. Would you be requiring new capex, and would you be raising capital, or you would be able to fund from your current cash accruals?
First question, we have the adequate capacity to at this growth. We are talking about 12 to 15% volume growth. For 2021, if you are aware, we have already said that we will try to reach sales of 100 billion square meters. And for that, maybe some capacity has to be added, some outsourcing has to be done. But at the end of the day, Kajaria's vision is to sell 100 billion square meters at the end of March 21. And as far as raising capital are concerned, we don't need, we have enough surplus, enough cash accruals.
All right, we leave it at that, sir. Thanks very much for joining us.